traders, welcome to our morning market update for this beautiful Monday, October 27th. Hope you have all had a magical weekend, had a good time, recharged, and you are now ready to start another week of the markets because we've got a lot coming up this week, a lot. All right, China deal optimism lifts markets. We're jumping right into it. Futures are up strong, ES up almost 1 percentage point. On a gap higher, on a significant gap higher, in fact. All right, NASDAQ up over 1%, 1.3% rally so far, and Russell up 1 percentage point as well. Big gains there. Europe modestly green. U.S.-China trade progress has helped the European markets get a lift off as well. Gold is down 1.7% with all this risk on and optimism going on in equities. Gold has sold off. Crude oil is down 1.1% as well, and Bitcoin up 2.5%, with Ethereum up 4.5%. Crypto space off to a good start this week. The U.S. dollar is flat, and 10-year yield steady near 4%. All right, so here's what's in focus. Trade talks are in focus. Donald Trump says that he's optimistic about a fair deal with President Xi. So President Donald Trump, President Xi are set to meet this Thursday. So expect to see a lot of volatility and movement and headlines that jawbone the market up and down and whipsaw it like it's nothing. Okay, have that expectation for Thursday. It's going to get wild. Okay, for now, though, tariff hikes on China have been averted, which is great. All right, Beijing is delaying the rare earth exports. So all the escalatory, talk of the last 2.5 weeks have been sort of paused for this meeting. So it's not a long-term solution, but it's, we're making a best effort and putting our best forward heading into this meeting together. So it's a good sign. It's optimism. It's hope. It's the promised land. It's the markets rallying a little bit to make up for that. All right. New trade frameworks have been ironed out with Vietnam, Malaysia, Thailand, and Cambodia. All right. The United States slapped an additional 10% tariff on Canada after a dispute, and tensions are rising there over a commercial that uses the voice of former U.S. president unauthorized. And I don't want to get into that, but yeah, that part of it is escalating. Okay, so the impact here on markets with this U.S.-China trade talks, which is what's dominating really the wire and the optimism as well in the market, as well as the risk-on tone, is the fact that tech and small caps are leading gains. Okay, the technology companies and small caps are off to a great start. Defensive are lagging. Defensive companies are on the sell-off. Copper's rallying as well on the hope of a renewed China demand coming back online with a better and strengthened relation between the U.S. and China. All right, so in addition to all that, we have a very busy week this week overall. Okay, because we have the third quarter earnings coming up. And my gosh, there's a lot of companies reporting third quarter earnings. You want to talk about third quarter earnings? It's this. The Magnificent Seven grabs the spotlight this week. It's time for the Magnificent Seven. And we have Microsoft, we have Google, we have Facebook, which is Meta, and on Wednesday, we have, that's all on Wednesday, by the way. On Thursday, we have Apple and Amazon. So Wednesday and Thursday of this week, heavy on the earnings front for the Magnificent Seven. A lot of other companies reporting, but those are just the biggest names. Plus on Thursday, you got U.S.-China trade talks. And you say, Thursday's going to be a busy day. I got Monday, Tuesday, and Wednesday to lead up to it to make some trades. Because Thursday is going to be so volatile, I don't know the outcome, so I'm going to have to rein it back a little bit for Thursday and Friday. Well, you're kind of wrong, because Wednesday, we have even more stuff coming. So what's happening here on Wednesday is the Federal Reserve's second last FOMC meeting this year, which means Federal Open Market Committee. And these are all the Fed speakers that you normally hear who are at the Federal Reserve banks scattered across the country, are meeting to make policy decisions, those of them that are voters. All right, so, it's widely anticipated that they're going to cut 25 basis points. All right, last week pretty much made it a given that we're going to get the cut. Why was it a given? Well, because last week we saw the latest look at inflation data, and it cooled slightly. The smallest incremental amount possible, but inflation cooled slightly, giving hope, to the traders that we are in fact gonna get a rate cut. Because when inflation cools down, the Fed's mandate is the labor market and inflation. When inflation cools down, and with a lack of labor market data, I'll tell you that in a second, but when inflation cools down, overall, it's more dovish, more accommodative of a stance by the Federal Reserve, more supportive of the market by rate cuts, increasing liquidity, etc. But the other part of their mandate is jobs, but we haven't seen the jobs report, and we're not going to see the jobs report until the government shutdown concludes. Therefore, we're missing half of the picture. I really wonder how that's going to come into effect for the Federal Reserve. And we're going to do a full Fed meeting preview Wednesday morning here on the Morning Market Update at 9 a.m. Every weekday, we're live at 9 a.m. I'm live, so tune in. But this Wednesday coming up, we're going to do an entire preview of the Federal Reserve. All right. Yeah. Like I said, lack of government data has been frustrating, obviously, for a lot of traders who are looking for that kind of insight, and as well for the Federal Reserve. We're going to do a little bit more of a deep dive on this on Wednesday. But look, here's the situation. Before we get on the options flow for the day, my levels, and then my trading plan. The situation is this. Okay? Overnight or over the weekend, you got better and more positive outlook on China-U.S. trade talks that are coming up on Thursday's APEC 2025 meeting. Okay, so, everyone's approaching the table. Good faith for Thursday. Great. That's awesome. We got some hope. Sunday, we got hope. Monday, we don't really have too much. We have some earnings. Tuesday, we don't have as much. It's a light start to the week, and there we're going to be trading on headlines about China, U.S. as we get closer. You think it's going to be, that's it? You're definitely going to get some headlines. You don't think you're going to hear anything from Xi and President Trump in the coming days? Absolutely, you're going to hear stuff. So Monday and Tuesday, that's what we're watching. That's the tape bomb risk. Wednesday, we got the Fed and a lot of Mag 7 companies reporting. Thursday, we got the actual meeting, which is going to create some crazy volatility. More than likely, no matter what the outcome is, there's going to be volatility. Plus, we have some after the bell news as well from the Magnificent Seven. And Friday is going to be the last day to digest all that and people repositioning before heading into the weekend. So what you got here is pandemonium from the middle half of the week to the end, and quietness for the first half of the week. This is what I suggest we do on days like this: is we start this week slow. We don't. There's no moment here on this week where I'm going to advise you to step on it, like you're a trader, step on their throats and go crazy. There isn't these moments, because the beginning of the week you have to start slower, end of the week you're gonna have to wind down slower. In the middle, you're gonna just have to deal with it. I think the thing you got to think about is, am I a news trader? Am I a volatility trader? Or am I a strategy trader based on distribution, auction market theory, volume profile? Because yes, all that stuff works in news, but news moves really fast from one level to the other. It doesn't really give you time to get on board. So the biggest thing you should think about today is, how involved do you want to get in news report trading, on event-based trading? Okay? Don't start as somebody who's got this strategy and I'm so patient and I'm going to wait for it. And I'm this guy that you can't be shaken, unbeaten. I'm so solid with my approach and my analysis. I execute like a robot. And then you get caught into the first report about the Federal Reserve on Wednesday and you blow out your account because the thing moves a lot. Don't be that person. If you've decided you're waiting for patient trades, news events like the Fed, like earnings, like the U.S.-China trade talks are not for you. Just admit it. It's cool. This week might not be for you. After Tuesday, nothing's wrong with that. Know your limit. Play within it. It sounds like a gambling website. TRADEPRO, poker, stars, tables. Okay, onto options flow for today. Call wall sitting at 69.10 to 69.20. It's not that far above. It's coming up about 20, 30 points. Okay, put wall at the downside, 76.60 to 77.80. Therefore, the pin here that we're pinned between the 780 and the 910 level on the S&P 500. The bulls right now control the tape, but 69.10 is a ceiling to watch on the flow. Now, let's take a look at these levels very quickly. In fact, before I do, let me look at some of the comments. What? No. I can hear just fine. Seth says no audio. OTM 8 Memo says I can hear it just fine. Okay, are we good on the audio? All right, let me start all the way from the top. Good morning. I'm just kidding. I'm hoping the audio is working. You know what? I heard that on Friday as well. Somebody said I didn't have audio, or I had audio issues, and then somebody else said they didn't. So I'm going to keep going, assuming we don't have audio issues. Hopefully, fingers crossed, the market gods help a brother out here, because I would hate to lose all this for you. Okay, the overnight levels are this: 68.89 is the overnight high. All right, 68.65 3/4 is the overnight low. Okay, so we have about a 30-point range on the overnight session. But here's what's interesting: the prior day high is 68.41. Okay, so from the prior day high to the overnight high, we're up over 50 points. We're almost 50 points, rather. We're up over 45 points. The prior day cash close, that means Friday's trade, was 68.28. The overnight high is definitely up 60 points off of that. All right, and the PDO, the prior day open, is 68.18, which is, now we're talking about 70 points from that level. And overnight, we got a 55.25 point gap into all-time highs. So here's my trading plan. Now that you understand what's happened. What's happened is Friday, we had a decent day, but Saturday, Sunday, all the optimism has led to an open above where we traded Friday. We left a gap, a hole in the chart, and we've consolidated up here. We moved up much higher. We're bullish. We're into new all-time highs. But should we be at all-time highs is the question, considering we have so much unknown coming out this week. That's the question. I think you know where I'm going with this, with the answer. All right. I anticipate we get a pull back to the overnight liquidity low of 68.65 3/4 on today's session. All right. This is the overnight low, but it's still on the top end of the gap. Basically, if you see price here, it gaps up here. Same we trade up here. Okay, this is the make or break level for me today. All right, if we hold that level of support, we could extend up to the 68.89, which gives us 34 points. All right, actually 24 points, 25 points, which is all I need. All right, and then above that, we could extend beyond to new all-time highs. That's fine. All right, but if we break the support that I'm talking about, the overnight low, we could back and fill the gap. I know a lot of traders look for gap fills, and they're not as reliable as you tend to think. Well, the times they fill so nice that it gives you just enough hope that gap fills work every single time. But they don't. They do eventually fill, but there's no actual timing behind that. All right, so just be careful with the gap fill approach. But I do think that if we can break the low of the overnight session, down we go, back and fill the gap. If we don't tag the overnight low at all, meaning we stay strong the whole time and shoot straight up to the overnight high, then I'm going to look for either a failed breakout of that high or continuation. So for me, this is what's unique about the way that I trade is I look for 5 levels: the overnight high, right? The overnight low, the prior day high, the prior day cash close, the prior day low, and actually 6 levels, my bad. And the prior day open. So 6 is my nose. So 5 plus the nose, 6. All right. These 6 levels to me are so key that this is all I wait for. I wait for one of these 6 levels to be triggered by price. And then what I do is I switch to order flow. All right. I need an order flow moment to confirm the trade. Why do I need an order flow moment? And what is an order flow moment, more importantly, is I need a moment where we get up into price and there's one big buyer that gets stuck. Because that moment ends up being huge for the context of the whole day. Or the market's selling off, it's going down, and suddenly there's huge selling and the market can't continue to go lower. That's a reversal moment right there for a stuck short who's going to be squeezed out of his position on a buy stop and get a stop loss run along with retail. I'm on the opposite side of that trade, on the long side as everyone pukes. All right. And we're both on the same side. I'm long from where they're stuck, but I'm looking for that squeeze of volatility where the stops are. All right. I'm a stop runner is the whole approach to mine. So I look for that order flow. So these levels, I love how traders give you a level like when this happens, I'm going to do this. I'm telling you these levels and ideas that When we get to this level, I'm going to decide if there's an order flow moment. All right, I'm telling you, there's dynamite hidden at these levels. Now, when we get to that level, is there going to be a spark? And order flow to me is that spark, because all the entire world's weight in dynamite in your bedroom is not really a risk problem unless you got a lighter. Then it becomes a risk problem. All right. I personally think we start the day. My lean is fleecing the longs. There's way too much price appreciation for the undertone of risk yet to come this week. Right? I don't know who's going to continue to buy here. And if they do, I'm not going to get in the way of it. I'm going to jump on board that team. I'm going to tell you this. The hunch here is we give up some of these gains on today's session, fleece the longs, then we continue the afternoon rally into the close, because bull markets open weak and close strong. All right? They do not open strong and close weak. They open weak and close strong. So I think in the morning here, we get maybe a little trickle to the upside, get some people stuck, run those stops to the downside, resume the rally in the afternoon. So I will be looking for a fade off of overnight highs or to buy the overnight low if we get there first. All right, that's the trade, guys. I love you so much. It's the plan. That's the options activity. It's about everything on the news that I could muster. Feeling much better. This is the sickness that's gone on since last Saturday. It's now Monday. So like a week and 2 days. And thank goodness I'm turning that corner. Speaking of turning the corner, I'm going to turn the chair. I'm going to see some of the comments, and then I'm going to bid you guys a farewell. And we'll be back tomorrow. Remember, crazy week. Keep it tight. Delay on the audio. You speak a second, passes, then I hear the words. Oh, man. Yeah. I'm going to look into that, guys. I'm going to go on the replay to see and make sure that we're getting the best quality feed here. I've had tech issues. I'm not going to lie to you. Resuming this morning market update, I've had tech issues. I've also ordered another camera. So rather than turning around and you looking at nothing, when I turn around, you see me at another angle. So that we're going to just wait a day or two for that to arrive. But we're working on the tech side. All right, OTM, why did you get yourself a put debit spread on Friday, sir? Just curious. What did you see? You just thought like going into the weekend there was going to be more of a risk off scenario? That was the update, because I'm not asking you why in a negative way. I'm just saying that's a significant stance to take. I admire you putting your foot down and saying I'm taking a stand. Just it's a significant one to take going into a weekend like this. So that's why I'm just curious. But you never know as well, because I think in today's session, I think we do get a little bit of downside. I know how options decay works. So I bet you even if we got down to the prior day close of 68.28, you'll probably be down a little bit, but less than now. Again, bro, I don't think prices should be up here. But again, I'm a trader. I'm not an analyst. So I got to turn that part of my brain off. Stop thinking where price should be and instead reacting towards going. And I think that turns the corner for a lot of traders. I love you guys so much. You guys have a great rest of your Monday. I got to get into the trading room. I invite you guys to check it out as well. TradeProAcademy.com. I'll see you there. I love you so much. Thank you for tuning in. We'll see you Tuesday, Wednesday, Thursday, and Friday of this week.